What's good, guys? I haven't done a recap in probably 2 months now, and you know what? I just decided to do something today. I am I'm actually going to go over eurusd and cable, which were the two pairs that I mainly focused on last week, and what I saw before I took the trades, why I thought the pairs were going, the mistakes that I made, what I would have done better, what in case you had a turbo week, what you could have been focusing on. Now, going into cable, the first thing I had noticed was we took out 2016 lows. So, these are the lows of 2016. So, I had taken out 2016 lows and if to put on the period separator, 2016 highs are all the way up here. Personally, I don't think price is going to come all the way up here. But for the mere fact that we've taken out 2016 lows, or if you want to go taking out 2017 lows, so basically range play has happened. Now price pulled up the last 2 weeks, price had closed above a breaker. So this breaker here, and then this breaker here. So this and this. So for me, price was bullish, and we had a bit of a void here. So knowing that you have this void here in price, what I wanted to see last week was for price to dip into this breaker and then push up to this odd block. Now, if we're refining it down to the daily level, this was what I was looking for. 1 point, so basically 29885. Having a void here. Pull of stops above this high here. So pull of stops above this high here. Now, if I'm to refine this big breaker here, I would go with this. So I'll take all of this off. So this is where I wanted to find support last week. Now, from Sunday looking to get prepared for Monday, I do not trade. I wait for London Opens and New York Opens. Now, for Sunday looking to trade to Monday, what I had noticed was we had driven into a daily order block from the previous week. So on Friday, price came into this daily OB. From Friday, price had come into this daily order block. So what I wanted to see was for price to find some distribution low or find support here and then push higher. Now, breaking it down to the hourly, we'll just go down straight to the hourly. Or rather, first going to the H4, what you will notice is that there was a H4 order block within the daily order block. So within this daily order block, which is a big light blue zone, I would mark out the H4 will be. So the H4 will be having the low at 8.5, yeah. So 8.5 and so having the highs at 1.2780, 1.2708. And you can see price taps perfectly into that on Friday. Now the distribution starts Sunday open, we'll have a little gap below, and if you go down to the hourly, this is what you would have seen. So now here's an hourly breaker. This sends price up to run stops, dip into the 4-hour OB. Price gets contained in the 4-hour OB, the distribution starts. What I want to see was for price to break below this and then a retest of this breaker for shorts. But then if I took shorts from here and I'm looking to collapse my trade at this point, I mean, that would have been less than probably just 1 hour. Yeah, just 1 hour, but I wasn't looking for that. So when price broke below this, broke below the low of this breaker here, I refined the trade down to the 15 minutes. So refining the trade down to the 15 minutes, price breaks below this. Here is a 15-minute order block, London open. So 15-minute order block, London open, price starts pulling back into that order block. So price starts pulling back into that order block. Taking shots from here, I got out right, I think somewhere around here. So it was a 5-hour trade. So if I was to do this, so it was a 5-hour trade. I got out just right before price taps into this level. Now price taps into this point, and then I wait to see if I'm going to get a bullish lower time frame breakdown. So now price has tapped into the body of the daily breaker. Going back to the 15 minutes, what I'm looking for now at this point is to see if price is going to give me some bullish breakdown. And we got that here when price broke structure. So this is the 15-minute order block. Price breaks structure here, 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 and here. So there's a lot of bullish market structure breaks. Now, if you're to add this retail pattern, I think I posted this in the group last week and I was selling them more. I don't use retail that much, or sometimes it lines up. So if you're to add this retail trend line, this is the break of the trend line. The retest of the trend line for me was this and not this. So this was the retest of the trend line. And when price was retesting the trend line, you can find it easily that at the same time we had a 15-minute order block. So this is the kind of confluence I look for if I'm going to use a retail pattern, and which is basically the trend line break, the retest of the trend line break, an order block where we're getting the retest of the trend line break. Now, I didn't get my entry here. What I did was wait for the 5 minutes. So when price pulled above this candle, which for me, I was taking this as a breaker. When price pulled above that candle, I had my stops a little bit below this. So this is what the trade was looking like. So price pulled above that, came back. Now, why did I have my stops below this? Because at the same time, I was expecting that price, since this for me, this was the invalidation level, but I didn't want to have an entry here and have my stops here. So I thought to myself, where is the place I would want to see price go below? Okay, sorry, this was my invalidation level here. I don't want to see price run this level again. I think I posted it on Twitter and equally on Instagram where I marked out this level as my invalidation level. But what I did was to make my stops tighter. I thought of, okay, this is the breaker. This is where we have the last order block, and this is the low. So I might as well put my stops just a little bit below the low of this place instead of having it, because this is originally my invalidation level. So I kind of found a way to refine my stop levels. And during the agents, rather before the market closed, price rallied. And then we had the contraction. So now on Tuesday, we have had 2 trades on Monday. So basically the first trade being shorts 5-hour. And then the second trade, if you had an entry here, this is what your trade would have looked like. So you would have been up probably 4-hour by Tuesday open, and then with the spike up again, 6 to 7-hour. But this is what my own trade looked like. So it looked like this. Sorry. Yeah, so my trade looked like this. And at Tuesday, London Open, after the rally up and price started pulling back down, I had a 3-hour. Now, I made a mistake on Tuesday and I collapsed some of my position because I started seeing price pull back down. I collapsed most of my position. And, well, you could call it a mistake. You can call it trade management. The reason why I'm calling it a mistake is because it was more of an emotional reaction. Now, my trade plan was have myself at break even, do not touch it till price gets to the point where you need it to get to. But when I saw this void here, I was thinking, okay, price might actually come back down and retest either this break or this order block here. So I shaved off most of my position and I had barely anything. But then price still expanded on Tuesday. And another thing I forgot to look at on Tuesday was we had a break in structure here. And this was holding as a daily pivot. Now, again, price was below the daily open. Here being the daily open. Here again being the daily open. So this trade was still sort of valid. This trade was still valid because my invalidation level would have been if price breaks and closes below this order block here, then I'll look to get out of my trades. But in the situation where I saw this big spike down, price kept on stabbing this level, I just thought the price might break through. So I shaved off most of my position around here, and I think here again. So when this happened, this barely meant anything to me. When this move happened up, it barely added anything to my account or to my account growth or to anything on my account. And so yeah, this is something I would have taken note, and this is how this day would have been approached in a situation where we have the breaking market structure already. The bullish trend has been confirmed by the reaction we are getting off of this level. The trend line break, expecting price to push higher. This would have been where you would have added to your longs by adding at this order block. And if you had done that, say you had your stops, even if it was a couple of pips below. So a couple of pips below, this would have easily been a 10-hour pushing up, even if you had your stops here. This would have easily been a good trade pushing up. And then on Wednesday, mind you, this is where we're looking for our final target, 1.29885. So now this has been done. Now on Wednesday, we had another trade. On Wednesday, price lifts sort of a double top on Tuesday here. I'll just call this clean highs. So clean highs left here on Tuesday. And price breaks down. It's very simple trade. So breaking market structure here, a push up, clean highs left on Tuesday. Price comes back to retest the hourly OB, and then price keeps running higher. On Thursday, I mean, I could kind of squeeze a trade out of this, but this would have been the trade. But as soon as this level got hit, which is 1.29, 1.2985. As you can remember, this was the daily OB here. So now the void has been filled. The stops at this level has been taken. The void has been filled. Price has gotten to that level. And if we were to look at this again, the amount of hours that cable provided last week alone was crazy. And it was one of those weeks that I had to trade Monday, had to trade Tuesday, had to trade Wednesday. And yeah, that was it. I don't think I really did anything much with cable on Thursday and Friday. So now Monday, this would have, if you took from this 15-minute OB and you held to this level. So now this is it's kind of what Moose does, Young Trade King. He does it sometimes where you basically have daily levels, but then you scale in on intraday and you hold it to your daily targets. This is the easiest way to make your account have those massive growths. Now, quite all right, these trades are not going to come to you every week. You might have to wait for a long time because quite all right, you're waiting for daily levels. But when you secure these daily level entries, you have to be patient enough to know that what someone's 3R could be on a daily level. So let's say someone gets in with 100 pips stop loss going for 300 pips, right? That's mostly how swing traders trade. Or 50 pips stop loss going for 300 pips. That's going to be somewhere from a 3 to 6R. But with you, because you're getting on a daily level, and in this situation, price had moved for 450 pips, right? But then your stop loss would have been 22, 25, let's just call it 25 pips. So 25 pips going for 450 pips. That's a lot of hours. I can't quickly do the math right now in my head. Because I know 25 times 4, that's 100, another 100, another 100, another 100. That's like 16. That's a lot of hours. Anyways, so this would have given you probably about 16 hours. This trade here would have probably given you the same thing again. This 20, this would have been another 20. And then this trade here, which is on the hourly, a couple of stops below, would have probably done you about 5 hours. Now, truth be told, it's almost, let me use that word, almost impossible to hold the same position size you had here originally. So let's say you got in here with a 1 lot size and you hold it all the way to this top, or you got in here with a 2 lot size because your stops were really tight and you held it all the way to the top. It's something that most people find difficult to do. Even I myself, I usually do not do it often. I mean, there are those special situations and I hold the trade up until that point. But more times what I do is I will initially cut like 50 to 40% of my position at my intraday target, and then I'll hold the rest for a swing. That way, if the swing doesn't actually work out, because you have to understand price, you're holding it for a swing, so price can move 80 pips in your favor and then come back to get you. So what I must do is, let's say I got in here using the trend line technique. This is where I would have wanted to get out, right? Intraday. But then as soon as price hits this level, on, and my TP is here, what I'll probably do is at 8 hour, I would shave off about 60-70%. I'll hold 30% up until this point. And I know you're thinking, okay, 30% is not that much, but 30% of a 20-hour trade, it's quite much. That's probably another 6 hours of your original position, or 7 hours of your original position. So yeah, that's mostly what you do at this point. Again, you shave off at this level, you hold the rest. You shave off at this high, so you shave off at this double tops if you're entering on the hourly, and you hold it to this level. And that was mostly it for gbpusd. Thursday there was a trade which, if you had gone on the hourly, breaking market structure, return back to this order block, moving higher. Yeah, that would have been a trade, but I wouldn't have taken that, because mostly I've taken shorts and longs on Monday, longs on Tuesday, longs on Wednesday. I wouldn't have pushed it, because this would have been one of those weeks that you can use it to make your account flip. Well, not flip per se, but use it to recover losses. That's if you took losses through the month. That's mostly it for gbpusd. It's easier when weeks like this happens, where already everything is bullish, starting from the monthly to the weekly to the daily to the H4 to the hourly, and all you just have to do is just find breaking structures, return back to proper levels to buy from, breaking structure, return back to proper levels to buy from, breaking structure, return back to. That was literally what last week was all about on gbpusd. Now, if I'm going over to Euro was a tricky one, because I got pissed on Monday. Now, what happened on Monday was I expected price to push slightly a bit lower than on Tuesday, so the price was slightly a bit lower, but I didn't get that. Now, looking at Euro, from Sunday leading to Monday, the first thing I had my eyes on were, what's this? I didn't even mean to bring this up, but oh well, that was the job. So yeah, first thing I had my eyes on was this. So range low, range high. Now, smack this out. So range low and range high. Now, this was the range low. Price had taken out this double bottom. Discount pricing happening here before price pushes back into it. So my next idea was that price was going to head for the previous monthly high. In this scenario, price took out the previous monthly low. If I want to put on the previous separators, you'll see that this is the previous monthly low. So previous monthly low has been turtle souped, and then price is heading for the previous monthly high. I know you're thinking, well, but the previous monthly low was being taken out that same month. Now, if I go ahead and refine, if I was to go ahead and refine this was the previous monthly low being turtle souped here. So now previous monthly high was on my targets. Now, for just refining sake, I'll use this range high and I'll use this range low. Now, after the range low got taken out, price pushes back into range. And this is something I always wait for. If price is pushing back into range, I want to see price find support. And as soon as price pushed back into range, price found support here. So which was the breaker that took out the previous, that set the low. So basically, the breaker that set the low, price pushes back, breaks and closes above the retest of that breaker, and price pushes up again. Now, when price pushes up, we cause a break in market structure here. I'm not going to fully draw that out. So we'll cause a break in market structure there, and then an order block. So now I had my eyes set on this order block, and then I was looking at the previous range high. So what I wanted to see was the price to drop into this order block and move higher, or for price to drop into the body of this order block and move higher. So now going into the week, if I'm to go, now this is another thing I had in mind. So this. Oh shit. So double tops. So basically the previous week's high, Friday, had double top set there. So this high is way too clean for price to just ignore them. And so double tops. Now going into Monday. Now going into Monday, for me, I didn't do much on Monday, though price had dropped into this order block here. I didn't really consider this a trade because it was mostly like a consolidation. So this was a clear example of accumulation, manipulation, and then we got the big distribution here. So now price accumulates on Monday, and then on Tuesday we get the distribution. Now this is a trade I took on Tuesday. On Tuesday, price takes out the previous daily high. So on Tuesday, price takes out the previous daily high. If you were to go down to the 5 minutes, after price takes out the previous daily high, if you were to look at the breaker, so price takes out this previous daily high, sets a breaker. So this is a breaker that takes out the previous daily high, price distributes lower, and then price comes back into this. So price comes back into this. So this was the trade. So price coming back into this, or easily this candle would have been the entry. London open. So price comes back into this and starts distributing lower from here. So now we're distributing lower in price. I got another entry here. So I took another entry here. It's just basic support turning resistance. I took another entry here, and then price distributes all the way down to this level. Now, I had marked out this area as my FTA, so basically my first trouble area. This is where I was expecting some sort of resistance from price. So price comes down, spikes into this, pushes up. When I notice that, I move my stops into profit. Now, at this point, this is where I should have most likely collapsed the trade, because I mean it was a daily level, but I held on to it, and I wanted to see what would happen with price. And at this point, I had left the house. My trades were in profit. I had moved my stops to profit. I shaved off a bit of my trade from here and here. And then, obviously, this happens, squeezes me out of the trade. Stops were in profit. It wasn't really a loss, but it was quite annoying. Now, I'm coming back at the end of the day. I had to come back and look at this. Now, at this point, where price is the first trouble area, what I should have been having my eyes on was to see if I was going to get a lower time frame breakdown that suggested that price was about to get bullish. And in this scenario, it was clear as day. So if I want to look at this, after this first spike into this level, price pushes up and then breaks down lower again. Now, when it breaks down lower here, let's mix another color. So when price breaks down lower here, what you would notice is there's a daily, within the daily level, price creates another breaker. So this little candle runs down here, and if you're to have this as your breaker, price pushes up, breaks back into it, and pushes higher. Now, if you had your stops right below this breaker, obviously you would have been stopped out. And there's a video I did, I think it was in June, where I said sometimes I'll enter in from a breaker, but then I'll have my stops below the order block just in case price uses both levels. So right where we have the order block, if you had done this entry here and had your stops here, that would have been a break above, a return back into that level, and then price would have gone higher. Excuse me. Or price would have gone higher, or simply a break in market structure. So basically a break in market structure here, return back to this order block, and price pushing up from here. There are so many ways to go about this. You can use the breaker, you can use the breaker in the order block, or you can use the order block. Whichever way works best for you. Sometimes it depends on what level price is at, and so many other things. So you're breaking market structure here, a return back to this order block, and then price would have pushed higher. If you had simply had this trade, this would have done above a 10-hour in a day, even if you had your stops a bit wider. This would have been your 10-hour done in the day. Now, going further into the next day, so obviously I did not do this. I had shorts, got squeezed out with little profits, stops in profit. So I got squeezed out. Now going into the next day, since now I know, okay, quite all right, this daily level works. This daily level works. It lines up with my cable bullish idea for the week. This daily level works. I'm looking for price to get to this blue line. Now, mind you, this blue line is a range high, in case you've forgotten. This blue line is a range high. So I have my confirmation that the daily level is in. I've gotten a reaction from that. So on Tuesday, what I'm looking for is a breaking structure to push higher. So London Open confirms that, okay, we want to break higher, but I didn't still take any trade from me. So what I'm waiting for now is see if we'll get another breaking market structure, because sometimes you get 2 to 3 breaking structures before the move actually happens. So we get the breaking structure here. Now, and I had 2 entries on this day. I must have been, I think I said it while I was in the chat with CoinTrader. I think, if I'm got his name right, CoinTrader96. So I was in the chat with him, and we got the breaking structure here. So I got in on this breaker. I had my stops right below this breaker. I got squeezed out, and I got in here again. I basically said in the chat, if this level doesn't hold, basically if this order block here doesn't hold, then I would expect for price to come back and fill in this void, maybe get a reaction from here, or everything just going downhill from this point. Mind you, we'll still have our double tops liquidity waiting for us here. So I'm always open to knowing that I could easily be wrong about a trade, and I think it helps me more because that stops me from over leveraging and blowing an account and whatnot. Because first entry here got blown out because I used exactly the breaker. I got my second entry here, and I just knew that if this doesn't work, then price might not just be ready to take out this double top. So we might come back down, fill in this void, maybe have a reaction from here, or I could just be wrong about being bullish that whole week. So I got my second entry here after being stopped out once. I got my second entry here. And I think it's on my Instagram, this trade. So collapsed it, I think after we got to 7-hour, retracing back to 6-hour, I collapsed the trade from here. And then the next day, price easily runs up, takes out the range high. Even the next day, there was still a trade, bullish structure again. Breaking market structure, I return back to this stacks of order blocks here, or easily return back to this breaker here. So either return back to this stacks of order block or return back to the breaker, however way you wanted to look at it. Here's another trade, 7-hour. So again, going into Friday, I didn't trade anything on Friday for Euro. I didn't think I took a proper trade on this day. But yeah, that's just it. And again, as I said, waiting for these daily levels to happen where everything lines up, it could be quite frustrating. It could be very, very frustrating having to wait for it. But at the same time, you could have one of those weeks whereby if you understand your intraday levels properly, you could have one of those weeks where you're doing 30 to 40 hour, and that could be you being done for the month. You have to understand, if being an intraday trader doesn't mean you have to trade every day. And for me personally, I noticed that if you have the patience to wait for swing levels to come to you, so basically you're almost moving like a swing trader, but you're having this tight entries and waiting for price to trend in your favor. Because if you had gotten in from here and waited for price to come all the way up to this point, this would have easily been a 20-hour. Same thing here, 10, same thing here, 7. Easily. And even if you had shaved off at certain areas, obviously my trade management rule is not going to be the same with you. You can decide to shave off at intraday levels, or you can decide to shave off at, okay, when price hits 5, I'll shave off, or when price is 6, some people 7, some people 3. Everybody has a trade management rule. Just find the trade management rule that works best for you and the one that works best for your strategy. Because more times you have to be able to trade what's profitable and not what you find. I don't know how to put it. Basically, trade a system that's profitable and don't trade emotionally. Most people have an emotional way of trading. I'll collapse my trade at 2 hour. because I don't like waiting to see if price is going to get to 4 hour. But then if they backtest the strategy properly, they'll realize that if they simply wait for price to get to 4 or 5 hour, which your strategy provides more times than not, they'll actually make more money. So you have to actually provide look at your trading from a systematic approach. And if you've done your backtesting properly, it's kind of a I think even Christine said it on Twitter the other day. It's a disrespect to the time you've put into backtest something that much and then go ahead and not do it. It's easier said than done actually, but it will take time. Some people get a hang of it and stay more disciplined than others. Some people it takes them much more time to get a hang of it. As I'm saying, so basically this was just it for Euro, this was it for cable. Here, this was it for Euro here. And as I said on Euro, entry here. So basically there was a trade on Tuesday, trade on Wednesday, trade on Thursday, and all those trades were just leading to one target, the range high. And as soon as I got the range high, I was no longer interested with anything that happened above market. But anyways, I hope that was useful. I hope that made sense to you guys and anything you can make from it. If you have any questions, I am always open to answering questions on Instagram. You can ask the questions on the YouTube here, or you can text me on Telegram, or you can text me on Twitter. I might not answer immediately, but eventually I'll get around to whatever questions you have to ask and I'll answer it. But anyways, I hope you guys have a good week ahead. The trading year is almost over. It's been an up and down year. It's been an experience this year. But anyways, I hope you guys have a good week ahead and a good month. All right. Bye, guys.